Thanks everyone for joining us for the, Q3 roundup, and really this is as much a preview to Q4. I thought I'd do this just to give you an insight as to what's happening with the funds, where we're going, and really to give you a Q1, Q2, Q3, and where we stand in the rest of the market. So how our funds perform against other funds, what's happening with the rest of the indices themselves, stock shares, that type of thing, and why I think that we are positioned to have an absolutely tremendous end to the year. Right, so there we go. Yeah, year-to-date review. So we'll start at Q1. It won't be a death by PowerPoint, but it'll give, I think, an interesting, or I find it interesting, an interesting insight as to what's happened where COVID was sort of at a height again in the Northern Hemisphere, and I think lockdown was coming to an end in the Southern Hemisphere, and now it's obviously all flipped around again with the seasons. But look, looking at Q1 on the overall market, so January the 1st to March the 31st, the Dow Jones, so one of the major stock markets in the world, was 30,000, and by the end of the quarter it was up to 32, well, nearly down to 33. I picked some tech stocks. Apple was Apple was down 5% for the quarter. Google up 18%, as you can see. Tesla down 13.5%. And interestingly, Pfizer took a drop. So it started at 42.32. As you can see, 36.23. So 14% drop for one of the major pharmaceutical companies. There's a number of factors that have been built into that, but it's interesting to see that despite everything, all the money that's being pumped into them, there's a share price drop. And I put Bitcoin in because a lot of us are in crypto, so it's interesting to see what it's done. So you can see it took a sharp rise of 90% over Q1. So really, what happened to us? So a few of you have been in, a few of you who are on this have been in since January, are aware that for the first 2 months when we launched the fund itself, the first fund itself, we got off to a flyer, 28% and 22%. Now, with Forex, we need volatility. And if you remember back then, it was the inauguration, there were the riots in the States, Trump was still clinging on to power. So there was a lot of volatility going on. So we were able to capitalize on that. And as you can see, 28% Jan, 22% February. Now, for those of you who don't know, and for those of you who, to remind you, there was a software error across a bunch of the brokers, so including the broker we use, ACY, and we took a drop of 32% in the blink of an eye. It wasn't a trading loss; it was a software glitch, which caused a lot of stress, obviously, not just for clients, but for me, who was the fund manager myself, and who was the owner of the fund, seeing clients, or the best part of 300 grand, get wiped out. Now, over the last 6 or 7 months, clients have had their money back, so that was reconciled. However, it obviously had an effect on the gains. So we were still from that. We were still in the positive, but it was a bit of a crappy time to go through. I'm sure we can all agree. Now, skipping forward from, instead of going through quarter, from January the 1st, so the beginning of Q1 to the end of Q3. So the Dow is, as of now, well, as of last Friday, it was up 11%, Apple up 9%, Google 57%, Tesla 6%, Pfizer now has recovered a little bit, 14%, and Bitcoin, as of the Friday, one Bitcoin was $41,500. I think it's up to 56, 57 as it stands at the moment. So looking at that, where would you stick your money? Well, you'd have made, from January the 1st, you'd have made 9% if you just put it into a fund tracking the Dow Jones and indices. If you put it in Google, you'd be down. If you put it in Apple, you'd be down. Tesla, Pfizer, you'd be down overall. Yeah, Bitcoin, you'd have taken a 90% rise. However, where does that leave you with money in? So just looking at Simply Bots itself, as we said, 28%, 23%, and you can see the figures there for yourself. This is on the first one that we started with. So if you'd invested 10 grand January the 6th when it started, after fees, you'd have had, including the loss, you'd have had a net return of 33%. So you've got 32 grand thereabouts. Now,
That's with a March glitch. Interestingly, if you put 10 grand in from April without the glitch, you'd have been 31. Your 10 grand would be worth 31 grand. The only trading loss we've had, interestingly enough, was July the 28th, where that day we dropped 0.5% across a couple of the funds, and obviously we recovered very quickly. But from a trading loss point of view, from January the 6th, we've only had one day where we've had any trading losses. So from January to end of Q3, the average return is 10% per month. So where does that compare with everything else? So if you had invested your money in a tracker fund following the Dow Jones, you'd have made £1,000. So you would be up 111,000. Apple, 9%, so 10,900. Google, you've done pretty well, 15,700, etc. Now, with the Forex, if you so based on those particular, the indices and the stock themselves, that's based on a buy and hold strategy. So you bought it on January the 1st, you'd held it and not bought and sold. So you'd held it, buying on a buy and hold strategy. That's what you'd be worth today. Now, as you can see with our fund, you put the money in, buy and hold is generally, that's what you're doing, and be worth 32 grand. So is Forex part of a portfolio? Yeah, absolutely. Absolutely. Have a Forex fund, obviously ours, as part of your portfolio. As I always say though, don't put anything in more than you can afford to lose, and balance it out across all the other stocks that are available, mutual funds, etc., that are available. So how do we compare then against the other Forex funds that are available, that are out there? I went on MyFX book, and you can see all the ones that are available. All the ones, everyone who has a Forex fund, they can submit it to this. And this is where, when I say our figures are independently verified, they're verified by the data that we provide for this particular company. Now on here, this is the top 10 that are promoted. And so I went with the one that, again, is automated, so it uses AI, and it's done pretty well at 1,252%. So how does that compare to us? That's over the last 5 years. So 1,252% over the last 5 years. But let's base it on this year to give it a like for like. So you can see it's averaged 4%. So 4% per month from January to September. So again, leave your money in the bank and you get what, 0.5% at the moment, a year if you're lucky. So even if you just put in here, good stable Forex fund, giving you marginal gains per month, you would net all gross, because this is pre-charge at 4%. So how do we compare to that? So you can see our straight line there going up. This is from February the 1st, because we changed the server, so MyFX book has reset itself. However, from February the 1st to today, we're up 75%, which includes the sharp drop of 32%. And these are our gross figures. So again, how do we compare against one of the best that's in the market? So with fees, as I said, if you invested with Simply Bots with fees, 32,000, you'd have got your 10 grand worth about $32,000. I put the 4% into the spreadsheet. I took out all fees. So on the other fund, you would, if you put 10 grand in there, you get 40,223 back, and that's if they're not charging any fees. So again, how do we compare? Well, we're holding our own against some of the best in the market for this year. Just to show you that, I guess, in real terms. So I printed this off today. This is from January the 6th to today. So this is the profit that's been generated just from this one particular fund that I'm showing you here. 477,000 as of this morning. I think one of you might be able to tell me, because you may have got the investor password. I think now that's close to 500,000. It just threw out 1.9% or thereabouts in the last hour or so. So best part of $500,000 has been generated across one of our funds, and you can see over the course of it, as it stands today, there's just over $1 million in there. We've had 1.3 million worth of deposits from January to today. of which 720, an overall balance of 730,000 has been taken out. But again, I put those figures in there so you can see them as a real figure. Now, the reason we've had a good day today, the reason we're off to a flyer for Q3 is Forex needs volatility. The reason we did well since we've been going since November 2019, the reason we did well in previous last year, etc., was we had Trump in power. So every time we sent out a tweet, the markets went into free fall or went through the roof. There wasn't that much in between. So if you look at it since then, we've been fairly flat. Biden has calmed markets down. You know, he's built bridges back with Europe. He's reintroduced America to the Paris Accord. And from an economic point of view, from yours and my pension point of view, I guess that's what we want really, some stability. However, from a Forex point of view, it doesn't provide the drama we need. We haven't got the big fluctuations between, you know, gold, dollar, euro, dollar, etc. Whereas today, these are just two of the headlines I clicked on for Yahoo. So you see tech stocks are having a go through the floor a little bit, and they're all experiencing a bear market. You've got everything happening with the Evergrande debacle, one of the biggest property companies in the world. 80 billion debt. Are we going to have a Lehman's? Are we going to have another Lehman's shock with that? China and America again are going through are we going to start a Cold War, etc. So again, from our point of view, it means that the dollar today is strengthening sharply against every other currency. So people are putting their currency into the safe havens. So US dollar, sterling, and yen. So you'll see if you look on the charts that they're strengthening against all the other currencies. So predictions going forward for Q4. China probably will prop up Evergrande. It's got an $82 million coupon to pay in the next 24 days now. Will they pay it? Probably. Will China bail them out? Well, I think they've got enough money to, and it'll be an embarrassment to the country if Evergrande is allowed to fail. However, it does create uncertainty. With uncertainty becomes a little bit of predictability for Forex markets. As we said, people start putting their money to the as I said, the safe currencies or safe haven currencies. So we've got that fund, and I'm predicting that it'll do, or the guys predicting, we've tested it, we're predicting it'll do 30% plus a month. So those of you who were in the bots and the funds last year and were experiencing double-digit growth every month, and saying to me, why can't we have that now? Well, because, as I explained before, because we haven't got the volatility we had, we can do it this way and use multiple currency pairings. However, I feel the risk again is slightly higher than doing the conventional funds, but it's there and it's available. Now we do need 250,000 in there to get it going. I think I've got 100,000 so far anyway. So anyone who's interested, drop me a WhatsApp or whatever, or Telegram or email. Tell me you want it, and we'll get it open for you. And secondly, up until last week, we only had US dollar available. So you had to open your US dollar account with the broker and then transfer your sterling. It would get converted, so you had the Forex, and then you're trading in dollar. And then when you took the money back, again, you're experiencing an exchange rate. But we've got enough money in now. We've got enough people coming in that we can now have a second currency, and we've chosen sterling. The reason we've done that is there's a lot of guys, in fact, a bunch of guys on here who have got private pensions, SASIS, so a business pension, who are now able to put some of their pension money into this Forex fund. A lot of the guys, I think, now have tested the water and are now spreading some of their pension money into it. Consequently, we've opened up a sterling fund. I guess the next one will be a euro, and then we'll just stick with euro, dollar, sterling. Couple of updates, nothing major, but I know a lot of you, or some of you, struggle to either put money in, take your money out, knowing how to go through the steps to open the account, open your brokerage account, because it's something you've never done before. So I've put these videos on the website. Whether you've got an account open already or you're introducing your friends, then you can send them to this page. It's my script, and this lady, she was a professional a professional journalist. So she explains it very, very succinctly. She's very professional. I'm quite proud of what we've done for these. So we've got the 4 stages of opening your account and putting money in. What Dave Hargreaves kindly reminded me was it'd probably be helpful for people to know how to take your money out as well. So we're getting that video put up as well. So how to press, which buttons to press to get your money out, because it's not as straightforward as we'd like it to be. You have to transfer from your trading account back into your MT4 cash account before you take your money out. So we'll have an online video for that as well. There's a testimonial page on the website now as well. So each time you send me a testimonial, or when you send me a positive WhatsApp message or a Telegram message, I'll ask you if it is positive enough. If I can put that on the website, and whether I can put your name or not. So a lot of you said yes to your name. Some of you have said, can you just put my initials, which is fine. I've kept them in a database, so if somebody wishes to verify it, then we can we've got access to show somebody that is a verifiable testimonial. And there's some guys who gave me a testimonial that perhaps wasn't as glowing as I would like it to be, but again, they're on there as well, because from my point of view, why shouldn't everyone know everything? There's no point just having 5-star reviews on something like this, because surely it can't be as good as this. Thanks again for joining us, and like I said, drop me a message if anyone's unsure about anything.